Morgan Stanley just reporting, and Wilfred Frost has those numbers. Let's get straight over to him. Wilf.
Hey, Becky. Very strong set of numbers here. Revenue $13.4 billion. Expectation was $10.3 billion. EPS $1.96 per share. Expectation was $1.12. They've had a very strong trading performance, as have the other investment banks. Decent and strong wealth management and no real big significant provisions. So across the board, pretty impressive. Investment banking, $2.1 billion. That was up 40% year on year. Expectation was 1.8. That level of beat comparable to the other investment banks. Trading, though, very strong, like Goldman Sachs, like JP Morgan. Fixed income trading, $3 billion. The forecast is 1.8. That's up about 170% year over year. Equities also strong, $2.6 billion. The forecast was about 2.3. That's up about 23% year over year. And then wealth management, which, as we know, is around about half of their business now. Also a nice beat as markets have rebounded. $4.7 billion there. The forecast was for $4 billion. Investment management also a decent little beat. The provisions line, even Goldman Sachs had a bit of an increase there of reasonable proportion. Not so for Morgan Stanley. Their provisions in Q1 were $407 million, already smaller in a percentage of total revenue anyway than Goldman Sachs and the other banks. Q2, it's fallen to just $239 million. There's one question I have in terms of the compensation expense, which is $6 billion and quite a lot higher than expected. But that's not enough, I don't think, to derail this performance. There are the rest of the big banks, but Morgan Stanley, I would imagine, is probably moving higher in the pre-market off the back of these numbers, despite the others. Morgan Stanley there? No, it's quite far away from me. But Morgan Stanley, I would imagine, is moving
We were
higher.
watching it a second ago. We were watching it a second ago. It was up by 1%, but then it was giving back some of those gains. Probably worth taking a look. Okay, it's back up 1.2%, but probably worth taking a look at a 5-day stock chart, because we've known since earlier this week when JP Morgan and Citi started reporting that trading was much better than had been anticipated. So it ran up with a lot of these stocks as we saw that news over the course of the week, too. But it is up by 1% now.
Yeah, not surprising, given very strong across-the-board set of numbers for them. And as we discussed yesterday, Becky, investment banking is the place to be this quarter, not commercial banking. And wealth management, because markets have recovered, and Morgan Stanley ticks both of those boxes. And the provisions aspect has fallen and was already not a huge question mark for them because they're not in commercial banking.